attempt to complete today's lecture in personal finance. This is the third attempt. We've had some internet issues, so I wanted to do a highlights for this week's assignment for insurance. So that's what this is about. And this will be posted to the playlist, uhplaylist.com, for this semester students in personal finance. I apologize, Comcast. I've been having trouble with the internet here in my home studio in Friendswood, and anyway, we had another issue today and lost it. So let's jump in. I want to cover really the things that you're going to need to know in this week's lesson. So here we go. Let me see if I can get it going. So I want to cover the highlights. These are the things that you really want to know. So I'm going to cover how to get an auto insurance quote. That's pretty well spelled out in your assignment, but what I wanted to warn you about, especially for those of you who may have jumped in and gotten an early start on this assignment. Hopefully you didn't go and just Google insurance quote, because if you did it that way, you're going to be inundated with insurance agents sending you quotes. So best way to do this is to contact your insurance carrier. If you're currently insured, this is an easy way for you to get an insurance quote, is just to ask them, your insurance professional, to give you a quote. And that's where you can ask them to change the coverages. In Money Study Group, you've been assigned lots of reading for this week related to insurance coverages to make you familiar with the main coverages that you need to know about, especially relative to your auto insurance and your home insurance. So do that reading, get familiar with the coverages, and then get the insurance quote so that you have a good idea of what your coverages are, so that you can then request an insurance quote to show you some different options. That's going to make you familiar with those coverages, and it's going to show you the price differences, whether you raise your liability coverages or lower it or add uninsured. Those are different coverages. Or maybe you raise the deductible on your collision coverage, or you raise the deductible on your comprehensive coverage. That's going to reduce your premium. So those are the things you can ask for when you get a quote, so that you can see how much these coverages cost and how much you can save by making some tweaks to the coverages. So how to get an insurance quote, that's my advice to you, is to start with your insurance agent. If you don't have a license, if you're not a driver, you're going to have to use a little creativity, maybe work with your roommate or a friend or a family member who does have insurance, but you still need to do the assignment. So, okay, that's how to get an insurance quote. Now, what I want to try to do now, if I can, is I'm going to jump into Write Capital. And I'm going to attempt to put it on the screen here. I'm going to log into Billy's plan, and I'm going to show you, if I can, if my iPad will let me sign in, which it looks like it is. I'm going to jump into Billy's plan, and I'm just going to show you how to add the insurance to your plan, and also mainly how to add your home to your plan. So let me get Billy's plan. Billy, come on, Billy, be there. Billy, okay, I got Billy. Now let me see if I can go to Me iPad. Okay, there's Me iPad. So the first thing I want to show you is how to add I want to show you how to add the property to your plan. So you need to add the property before you add the insurance. So again, this is pretty much spelled out in Money Study Group, but I just wanted to see if I could get you a little better information. So first thing I'm going to do is, let me see if I can get this going. You can see Billy's plan right there, and it's in Profile. That's pretty much where you add things. you'll go to, we're in net worth. So profile is the upper navigation and net worth is the lower navigation. And that is where you're going to go. So let me see if I can get rid of me and just show you what I'm trying to show you. So there we go. Now this is where you would add property. So you'll go down here and you'll add property. And let's see. Right now he's got property, his primary home, and the way that got there, that primary home, was we added the property. Property, I'm looking for home. Okay, something strange here now. Here I am live, and this is always fun when you're doing a live stream and you get stuck. But I'm looking for, how did we add home? I was pretty sure we just did, I guess we did the loan first. So we've got a loan here, home mortgage, and this is where we added the home. And so that will add then the property. And that's what we have here. So we've got a loan, we've got property, primary home. And be careful when you're adding this, if you see that it says rent, you're not going to have property. You're not going to have an asset in your plan. So make sure you click down on the own. So it will have primary home. And let me get out of here. I think I can get out of there. Okay, so that's how you add the property. Just go to Profile upper tab, Net Worth, and when you add the loan, you're going to, in fact, that's how you're going to do that. You're going to add a loan. Whoops. Okay, I didn't hit the right button. I'm on my iPad, and let me see if I can go here again and give you so this is where we would add a loan. Add account over there, add loan, and when we do that, you can see the types of loans that can be added. So that's how you're going to do that. I'm going to delete that, delete, and shrink that down. So that's the first thing, is you want to be able to add the property, in this case your home. You're going to add your home so that you can add the insurance. Now to add the insurance, it is relatively easy. Instead of going to add property, you're going to go add account and you're going to add insurance. Pretty self-explanatory, but you're going to add insurance, and if I get enough insurance, so this is where you're going to add your home and your auto. So this is where, okay, I'm having a little trouble. I'm just going to leave that right there, and you should be able to see home and auto, and that's what you're looking for. You want to add your home and auto insurance so that you have that in your plan. So now I'm just going to show you the data cards. In fact, I'm going to go into Billy's and show you, come on. So once you add it, the data card will be there. So this is Billy's data card for his home. You can see his homeowner. So I'm just going to show you this because I want you to see the detail. So this is the detail. We're going to link it to the primary home, which is what when we added the loan, that's where it automatically came into the plan. So there you go. It's got coverage amount. This is the insurance, and that's pretty much it. Just put in the amount of coverage. It's got to be at least the amount of the loan. Sometimes, like if you put a big down payment on your house, then your coverage amount may be less than your insurance. I mean, your coverage amount on your insurance policy may be a little bit less than, it can't be less than the market value. Or, well, I'm sorry, I'm confusing myself. So if you put a big down payment on, then you have a lower amount. Like the property value might be $500,000, but you're insuring it for $350,000, and that's okay. But you can never have less coverage than you have for your mortgage. So if you owe $500,000, even if your house is only worth $450,000, you still have to insure it for $500,000. So just that shouldn't be a problem for you. But okay, so that's the home insurance, and then you got Billy's super cool car, and this is where you get a little bit more detail in terms of the data card. This data card has more fields, more data that you need to pay attention to if you don't want to get deductions. So this is where your auto insurance quote comes in handy. When you look at these coverages, and because we got interrupted with the Wi-Fi, we didn't get a chance to really explain all these coverages, but it's easy enough for you to figure out what these coverages are if you decide you want to understand these coverages, and I hope you do. But there's just so much to cover in insurance. There's no way I can cover it all in 1 week or one lecture. I just want you to become familiar with the main coverages, the most important coverages, the most common coverages that you're going to need in your as you become a consumer of insurance. Remember, my goal for you and this week is to help you become a wise consumer of insurance. And to do that, you have to understand the coverages. So here you see the premium that comes from the quote. Bodily injury, if you push the little I there, I think, if you push, well, it's not bodily injury per person, it gives you a little definition. But again, there's a lot more information about these coverages that has been posted in Money Study Group as part of your reading assignment for this week. So check that out, and let me just keep that up there. So you've got bodily injury, and then you've got property damage, and that's part of your liability coverage as well. Bodily injury per accident, that's what the PA stands for. Bodily injury per person, that's what the PP stands for. And then property damage. So let me just explain those real quick. If you get in an accident that's your fault, then your policy, your liability protection will respond. So let's say we get in an accident and it's your fault, and I have my grandkids in the car, and my car gets totaled, and my grandkids go to the hospital, and I end up dead. Okay, that's a pretty grim scenario. But if you caused that accident, then you're going to get sued. And maybe you don't get sued, but we just file a claim. You're going to owe that claim. You're going to have to pay for my loss of life, which is at least $100,000, probably more. My wife will, my estate, if my wife's not around, my wife will sue you if she's around. If she's not, then my estate would sue you. The grandkids' medical bills would all be a claim against you. So your liability coverage would respond to that claim. And let's say I'm driving my F-350 truck. Probably nobody in my truck will be injured if I'm in that tank, unless you're driving an F-450 pickup. So let's say I'm in my Lexus, and my Lexus gets totaled. Well, to buy me another Lexus the same age as the one I was in, your policy is going to pay up to $50,000. If I have a brand new Lexus and I have a really nice Lexus, my Lexus could cost $60,000, and you would be $10,000 out of pocket already. The bodily injury per person, so each of the grandkids went to the hospital, your policy is not going to pay over $100,000 for either one of them. But remember, I died in the accident, and it's up to you to pay for my loss of life. And so that's a high number typically, and your policy will only pay $100,000 for my loss of life, which means you may be on the hook for more money than your policy will respond to. And the total amount, $300,000, that's per accident. But just because you have $300,000 coverage per accident doesn't mean your policy is going to pay $300,000 for my death. because it's only going to pay $100,000 per person. So that's how those coverages work. It may take you a minute to wrap your head around those coverages, but again, these are coverages that you can increase significantly, and most of the time when I was a State Farm agent, I would encourage my clients to increase those coverages, especially if they had assets to protect. Now, when we talk about liability insurance, we're talking about protecting your assets. Liability coverage does not pay for your property. It pays for negligence that you cause, that you become liable for. That's what liability protection is. And that's why you need it. Now, you may be saying, hey, I'm a student. I don't have any assets. No. If somebody sues me, there's nothing to sue me for. That's fine. However, there is this thing called garnering your wages. So in this scenario where I died because of you and your negligence, because you were on your texting on your phone and you got in an accident and I died and my grandkids went to the hospital and my vehicle got totaled, it's your fault. You're liable. You're going to pay. In that scenario, your policy, most likely your insurance company is going to pay policy limits pretty quick, at least for the $100,000 for my death. And that means then you will be responsible for any judgment against you for the claim that my wife makes, because she really likes me and she didn't want to lose me, and I make a lot of money and she's missing out on the money that I would make, and all of those things add value to my claim against you that you become responsible for. And you don't have any money, you say? No problem. You're a young person. You're going to a business college. You're going to get that dream job. And I'm, not me, but my wife and her attorney, they will garnish your wages so that when you're my age, the ripe old age of 164 years old, you will still be paying the claim, because your wages, everything you earn for the rest of your life until that claim is paid in full, your wages will be garnished. So your biggest asset, most of us, the biggest asset we have financially is our ability to earn income. And so liability insurance is important, even if you don't have anything, you don't think you have anything of value to be sued for, you still have that asset, your ability, your earning capacity over your lifetime. So when you get a quote, just be curious and say, what would it cost? And if you get, let's say you bump these coverages up to $250,000 per person for liability, then you might want to look at a PLUP, a personal liability umbrella policy. It's just another way to add an umbrella over and above your car insurance and your home insurance. That's kind of beyond the scope of this lesson, but it is something I want you to be familiar with. And wealthy people are very open to, and most people that I served in the Clear Lake area when I was a State Farm agent, when I told them about a personal liability umbrella policy, because they owned so many assets and they had so much earning capacity, it totally made sense to purchase that policy to give them umbrella protection. But that's liability. Now, here's a couple of things. Biggest reason for deductions on this assignment is you forget to check these. If you don't check these, then you're going to get a deduction. So when you get your quote, you want to make sure you know what you have for comprehensive and collision. Remember, those are property coverages, and those coverages protect you for the loss of your vehicle in the event that you have one of those perils. So again, this week's class collaboration was, before we got interrupted by the internet, what is comprehensive? Comprehensive means very, 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 very broad. So I'll tell you, one of the things I want you to understand is how deductibles work in a liability or an insurance policy. Deductible or So deductibles and exclusions. I want you to understand those two things. And again, you have tons of reading material in this week's assignment just to become familiar with these things, because you need to know what is a deductible and what is an exclusion. So let's start with the deductible. The deductible is the amount you put on your policy, and you say, okay, I'm willing to pay this amount, this deductible. When I have a claim and it's covered and the insurance company comes and gets ready to pay you, the first thing they're going to do is look at your the first thing they're going to do is look at your coverages, but then they're going to look at your deductible. If you have coverage, they're going to, write an estimate to make you whole, but then they're going to deduct your deductible. So let's say that you have a claim, you hit a tree, your car gets damaged, and you have collision coverage, and you have a $500 deductible on your collision coverage. And let's say the damage to your vehicle is $5,500. The insurance company is not going to pay you $5,500. They're going to deduct $500, your deductible, from the amount that they pay you. And that's why when you get your quote, if you increase your deductible, you'll see that you will save money. And that's the whole point of having a deductible. You carry that risk. Instead of transferring that risk to the insurance company, which is the whole premise of insurance, is to transfer risk to them for a premium. You pay a price, a premium. That's the cost of your insurance. And what you get in exchange for that premium that you give to the insurance company is you get to transfer risk to them. With the deductible, you're actually maintaining that risk. So if you have a $500 deductible, you still have a risk of $500 for the peril that's covered. In this case, we're talking about collision. Now let me talk about comprehensive for just a minute, because comprehensive, it is a super big coverage. And I want to just put that up there. Comprehensive coverage, it's super broad is what I should say. And in my opinion, comprehensive coverage on the auto policy is the most valuable. Dollar for dollar, the best bang for your buck. So we started out today, before we got interrupted, talking about hurricane preparedness. Well, your car under comprehensive coverage it includes flood. It includes wind, it includes fire, it includes theft, it includes pretty much everything, because comprehensive covers everything. It's comprehensive, so it covers everything, except it does not cover the perils that are excluded. So what do you think the number one exclusion is under comprehensive coverage? There's one exclusion that is number one, and that is, dun, da, 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 drum roll. Do I have a drum roll? I don't think I do. I have a little corporate music in the background, maybe. I'm not hearing it. Maybe it's not playing. Okay. If you can hear the music, you can. I pushed the button and it didn't play. Hey, Lansing, that's my tech team. Do you guys have any solutions for this? Anyway, maybe it is playing and I just can't hear it. So here is the exclusion for comprehensive. The number one exclusion is, hopefully you guessed it, collision. Hey, I hear the music. We do have music. So collision is the, that's the deductible for this. For Billy's collision is $1,000. We don't have a deductible listed for the comprehensive. But comprehensive covers everything unless it's excluded. And the number one exclusion is, hopefully this is obvious, that collision coverage is not covered under comprehensive. That's how exclusions work. So it's important to understand exclusions. When we talk about your homeowner's policy, which we'll jump into real quick, excuse me. So let me get out of there and we'll jump into the homeowner's insurance. And so we've got $321,000 of coverage. That's what covers the dwelling, the house. And the homeowner's insurance, depending on the type of policy you have, can be very much like that comprehensive coverage in your auto. So what I mean by that is your homeowner's policy, the insuring agreement, if you have a broad form policy, which is what I always recommend, it's kind of getting hard to afford one of those these days. Excuse me, I coughed. I muted the mic for you so you didn't have to hear it. So homeowner's insurance is a lot like comprehensive coverage. It's very, very broad. But what it doesn't cover are the things that are excluded. And that's why it's important to know, as I said before, I got disrupted, flood insurance is not covered under a homeowner's policy. So hopefully this helps you guys get ready for this week's assignment. It's really not difficult, but there are some details that I wanted you to be aware of. Number one, I wanted you to be aware of how to get a homeowner, or not a homeowner's, but an auto insurance quote. Don't just go out on the internet and start searching for a quote. Call your insurance agent. If you don't have insurance or you don't have a license, you're going to need to use your brain and your imagination, and you're going to have to work with somebody to get an insurance quote. And that way you can use that quote as a basis for your for updating your financial plan and Right Capital. Now, if you do have a vehicle in your plan, like that Tesla or whatever it is you put in your plan, if you can get a quote for that vehicle, that'll be fun, that'll be cool, that'll be informative. But the easy way to do this assignment, which I'm always about the easy way, is to just figure out what vehicle is covered under your policy. And if you're working with your roommate or a friend or family member, just choose one of the vehicles that they already have coverage for and use that vehicle to get a comparative quote to change some coverages. That's the easy way to do this assignment, and that's the way I would encourage you to do it. But if you're just curious and you really want to buy that Tesla one day and you want to know what the insurance costs, then use that vehicle and ask your insurance agent to add that, to give you a quote as if you're adding that vehicle to your policy. And they'll email you a PDF of that quote, and that's what you will use to update your financial plan. And you're certainly welcome to show me that quote. I'll be eager to see it when I review and grade your assignments. So I think that's going to do it for now. Again, if you have questions, jump into GroupMe. And if you don't get your questions answered in GroupMe, then you're welcome to reach out to me. So I'm going to end it right there. And hopefully these highlights helped. I apologize for the disruption earlier, but I'm going to post this to the playlist now, and I'll see you next week. Next week, we will be talking about investments. So investments, typically the most popular topic in the course, and I look forward to teaching you more about investing. So we will cover 4 investment strategies that are designed to help you maximize returns and minimize risk, and I look forward to that. Let me see if I have anything handy to show you for what's coming next week. That would be number 9. I'm just looking in my little let's see. Yeah, let's try this and see if it works. So this is what we will be doing next week. Let me just jump in here and okay, yep. So these are the 4 investment strategies designed to help you maximize returns and minimize risk. Number 1 is diversification. Number 2 is dollar cost averaging. Number 3 is, I think I got them mixed up. It is diversification, asset allocation, dollar cost averaging, and portfolio rebalancing. And in addition to those 4 investment strategies that are designed to help you maximize returns and minimize risk, I'll teach you about the perfect investment. Do I have the perfect investment? Don't have anything handy for that. I do have a Quizlet that is for the perfect investment. I guess that's an old video. I'm not sure that's the right one that I want to show you. There we go. The perfect investment is, as you can see on the screen, a 401k, and we'll cover that next week. In addition to the 4 investment strategies that are designed to help you maximize returns and minimize risk. So thanks for your patience this week. Again, I apologize. I'm going to go make sure that this video gets posted to your playlist so that you have the highlights. Take care. See you next time.